All right. Hey, everyone. Let me adjust this microphone. Okay. Mark here, Mark P Markets. Thank you for joining me for another Bitcoin video analysis. Hold on a second. All right. So normally I stream on Mondays, but today is Sunday. So I know it may be throwing some people off. I apologize for that, but I'm not going to stream tomorrow. So I figure I'll just throw it in there today and you'll have something to work with. I'll be back on my regular schedule next week. Okay. So with that being said, let's get started. Let me just pull this up over here. Okay. Hold on a second and we'll get this thing going. All right. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay. Now, so real quick. All right. I got my regulars. Hey, Stian. All right. Cool. I got Ramen. All right. So, hey, thanks for joining, guys. Again, this is going to throw off my regulars because everyone expects these streams on Mondays. So again, I apologize. If you're new to the stream, welcome. I am simulcasting on TradingView here. So hold on. Let me just pull that up so I can see what's going on over there. All right. So if you're new to the stream, let me explain to you how this works very quickly. I'm only going to be on here for 30 minutes. And here's what I'm going to do. First, we're going to talk about the economic calendar. Second, I'm going to talk about this Bitcoin situation, okay, which is the title of the stream. And then third, I want to go over bot signals, okay? So there's some important things to be said there. And so if you're a student or if you're a member of my community, feel free to ask questions. Those are the only questions I'm going to address. If you're not a member or not a student, I'm afraid I'm going to have to skip your question. So I apologize for that, but I have to do that in order to conserve time. All right, so again, let's get to the first part here. Oh, and by the way, if you want to share what city or what country you're from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. Okay, you guys heard that a million times. All right, now, so first things first, the economic calendar and why I go over this all the time. It's an important exercise to get into. Now, I can read it for you, or you can tell me the events that you think are important, and I can tell you whether they are or not. This is better that you do this, right? I like to go back and forth with this. Sometimes I'll read the calendar. Sometimes I'll ask you for the calendar events. You need to be aware of what economic events are scheduled for the week ahead, because that can help you mitigate risk. That's the whole point, okay? The person that wins this game is the person that understands how to manage and take risks. That is it. Now, so let's start with that first. Okay, so I'm just looking at the comments here. All right, TradingView people, now would be a good time to say anything if you want to say anything. All right, and if you can't see me, just refresh the screen over there. That should solve the problem. And I'm going to make my chart bigger because you really don't need to see what I look like anyway. All right, so here, let me do that. We'll go right into the chart. We'll just make it bigger for the economic calendar. All right, so who wants to begin here? You guys, oh yeah, thanks, Paige, for that reminder. Yeah, if you like the stream, you like the content, please press the boost button. Please press the like button on YouTube. Please subscribe to the channel, and it helps me. I have a lot of content coming out. If you noticed, we're clipping my older streams. We're clipping some important comments and things that I've said on previous streams. So check those out. There's a lot of educational material. It's on my YouTube channel. All right. So thanks for that. All right. Anyone want to take a guess at the economic calendar? Anyone want to? Don't be shy. What do you think's important this week? Anything? Anything? Tell me what you think's important on the economic calendar. I'm not going to spend a lot of time on this, but I just want you to be in the habit of checking that first. This is particularly important if you day trade or if you are in Forex pairs. This could be pretty, particularly important because these are scheduled events, right? Compared to or in contrast to unscheduled events like a surprise piece of news that can come out of nowhere and that can change markets dramatically, right? We see that happen all the time. So, hey, Kai. All right. What do you think next week Bitcoin price? Okay, hold on, Khan. So we're going to talk about that, but first, economic calendar. No one's telling me anything here. Anything on the economic calendar? Anything? Anything? Hey, Alice. Again, so all my regulars are joining. Yeah, I normally don't do this on Sundays, so I have to do this today because I'm not going to be streaming tomorrow. Okay, so and then next week I'll be back on my regular schedule. So I'm just doing the stream today. That's all. Anyone want to take a chance at the economic calendar? Kai says possible big week ahead. Okay. Why do you say that, Kai? What's so big about the week? Anything you want to share there? So again, and the reason why I'm asking people to fill in the blanks on the economic calendar is because if you say something that may not be important, and I'll tell you, hey, this is not that important. This is how we learn. If I just rattle off the events to you, it's just going to go in one ear and right out the other, right? So I want this to stick. It's an important part of your routine as a trader. Now, by the way, if you are an investor, this stream is probably not going to be that valuable to you. This is more for traders, swing traders and day traders. That's who's going to get the most out of this. If you're an investor, this is going to be too detailed. Okay, so all right, so Kai, for the U.S. inflation rate. So what is that inflation rate? Are you referring to the CPI? Can you be more specific? And day and time of that? Because that, and now Michigan Consumer Index, not that important. Usually not a big market mover, usually. Okay, and that usually comes out like on Friday. So right, Raman, CPI on Wednesday. There you go. Okay, so that's the inflationary report. Wednesday, it's usually CPI plus PPI. Bill says, hey, Bill. All right, so we have a number of things. Look, Kai says we have the ECB rate decision. So guys, can you give me the dates on these? The dates and times possibly? So it's important for everyone to see. So here, look, so we have the CPI right here. I'm gonna put this up on the screen. So CPI on Wednesday, all right, which is the consumer price index, inflationary number that can move markets. Okay, stocks, it can move the coins, it can move the S&P, it can move the bonds. Important number. Okay, rate decisions. Any rate decision, especially for the major banks like ECB, Bank of England, Bank of Japan, Swiss National Bank, like those banks, their rate decisions can have effects. Okay, usually not as heavy as the U.S. central bank or the Fed. Right, the FOMC meetings usually have the biggest effect because we have the world reserve currency still. But the other banks you want to be aware of, because if you're in a Forex pair, it can affect that pair. Okay, so we have CPI on Wednesday and PPI Wednesday and Thursday. ECB on Thursday. Time depends on your time zone. Okay, so well, I usually refer to Eastern. So thank you, Raman. CPI Wednesday, 8:30 a.m. New York time. All right, so you translate that to your time zone. That's an important number. The ECB rate decision, that's usually what, on Thursdays? Make sure you know that. That usually comes out around 2 a.m., 3 a.m. Eastern time, or like basically the open of the European session, usually. Okay. All right, on TradingView, if you can't see me, just refresh your browser. That's usually the problem there. Just refresh your browser and that solves the problem. All right, anything else? So you guys pretty much have it covered. The only thing I would say that's not that important is the Michigan Consumer Index. That's usually not a big market mover. Often that comes out, like I said, on Fridays or something like that. And it's the market. I've never seen a major reaction in the markets on something like that. Just as a quick recap, the main things you want to pay most attention to when it comes to an economic calendar is non-farm payrolls, CPI or anything inflationary, and anything FOMC, okay, FOMC meeting minutes, FOMC meeting, rate decisions, and any kind of testimony from the chairman of the Federal Reserve. Those are the main things usually that are scheduled events that can move markets, okay? Also, certain company reports can move markets. Like if, for example, Google has a bad quarterly report, that can move the NASDAQ, right? That kind of thing. Or Amazon, a major market player, if they report bad numbers, that can have an effect, particularly in the stocks, okay? But that's not going to affect like the bond market usually, all right? Anything that's relevant to the dollar and inflation and interest rates, that's where the bonds are concerned, and that can move things. All right, I wrote an article on TradingView about Bitcoin and the bond market a couple of weeks ago. Make sure you check that out if you don't understand the relationship. It's a very important relationship, and a lot of people, it just goes over their heads. Okay, so Stian, Thursday, the Fed's Bowman speech. Okay, there's something like that, Stian. Good, I'm glad you brought that up. See, something like this, Fed's Bowman speech. Now, Bowman is not he's not the chairman, right? So a lot of these Fed governors, they speak and they don't really say anything that important. So I wouldn't worry about that. It's really the chairman. So Powell, anything that Powell comes out with, because he's the one that can hint, right? And people take whatever he says very seriously. A guy like this, it's usually not it's not usually as relevant. Okay, Bill, for BTC, they have SEC and ETF decisions Tuesdays and Fridays. Okay, that's interesting. This can affect Bitcoin. Okay, that all that SEC drama. So maybe that's what Bitcoin's waiting for, and we're going to talk about that here in just a second. But thank you for bringing that up, because that's not a piece of economic news. Obviously, that's regulatory news, which again, that's good to know. Okay, for those that are not aware of that, definitely want to be aware of those, how those come out. Hey, Shubham, how are you? Hi, I want to work on thumbnail. Okay. Oh, okay. Actually, Shubham, I have someone to appreciate that. I have someone taking care of that for me now. Okay. But if you want to get involved, send me an email or send me a private message in the Discord community. By the way, check the links in the description, everyone. There's a lot of things going on. We're going to talk about the bot here momentarily, but there's a free area of the Discord community that you can join. We have a community chat. We have some interesting things because I have Alex in there, and he's been doing some great work moderating and engaging people and giving people some important things to think about. Check that out. It's free. Okay. All right. So what do you think about liquidation heat map for Bitcoin? Okay. I can't really address that question right now. I think it's an interesting idea, but the problem is anything that's given away like that for free or that's available usually doesn't have a lot of value. Okay. So let's leave it at that. I don't use things like that. Less is more in this game. So anything that invites more complexity is usually not a good idea. Let's talk about Bitcoin, which is the title of today's stream, how to trade the 25K support break scenario. I just published my TradingView article a few hours ago about this situation. Okay, so you can check that out as well. Here's the thing. So Bitcoin, I called the trade a swing trade a few days ago, and at 26,200, it activated the trade, right, a few days after I called it, and it turned right around. That's not bullish momentum. So this is concerning. Now, here's the thing. So I actually sent out the exit for that trade. That trade, you guys should be out of that trade, right? It's a 450 point loss or whatever. The original stop was 1,000 points. So you saved half. All right, not bad. It's a loss. It sucks, but it's better than losing the whole amount. Here's the thing. This is what concerns me. First of all, and this is what I want to point out, because this is the learning lesson. This level here, to the 25K area, this is a major support. Okay. And what I teach my students about major supports is you want to be looking for longs in these areas, because there's a high probability that this thing reverses and continues the broader trend from this area. Right. So, okay, great. The market has tried a couple of times. This is where the problems come in. All right. So we have the level, and in this area, going short is high risk. Okay, this is the conflict, because we have bearish momentum going into a major support. Which one carries more weight? This is the question that you need to answer. So the broader trend on Bitcoin is still, at this moment, it's still bullish, because this is a higher low. This is basically a higher low, right? It's higher than this low over here. So this structure is generally, on the long term, bullish. Now, in the midterm, this structure is more of a consolidation, because we have basically we have a similar low, okay, or basically like a double bottom, and we have this double top situation, okay, basically. So that doesn't really change the trend. It just means we're in a consolidation. Okay, that's our midterm. So that tells us on our short term, okay, this is an area that we should be looking for longs as a swing trader. But we have a conflict, and that conflict is this, right? Bearish momentum. Let me switch over to the 4-hour chart, because that will make it a little more clear. What we're looking at here is bearish momentum. We have lower highs. These two squares that I put on the chart represent lower highs relative to these highs up here. So after 28K broke, right, relative to these highs, after 28K broke, I see one lower high, I see another lower high. We should not see lower highs going into a support level. These buying attempts that we saw should have followed through. I mean, look at this. It tried, right? This was the SEC news. That tried, right? And completely failed, completely gave it back. That means every time we have these buy attempts, right? Every time, more and more longs are getting long. They're getting sucked in. mindlessly. They're following these fake gurus on YouTube who are telling them that Bitcoin's going to be at 50,000. Just relax and hold on to the, whatever. These are lower highs. More and more people are long. That increases the chances of this support level breaking. Okay. So I am not optimistic at all about the support staying intact because of that and because of the bond market. So I'm going to point out the bond market. Again, people, you need to understand this relationship. My students do because I talk about it all day long. But here's the bond market, 10-year note futures, okay? This is not bullish at all. And we're about to test these lows. Again, we have a lower high here. Look at the candle that we had on Friday. That's all bearish. So it's not a one-to-one relationship. I have to remind everyone. But over the next week, especially with like something like CPI coming out, and we have some of these heavy economic reports coming out, that can take out these lows or at least lead to a test of those lows. That puts more pressure on these markets, especially something speculative like Bitcoin, okay? So with that being said, that increases the possibility that we're going to break these supports. So to answer the question, how do we trade around this? Well, for one, shorts are, while they are high risk, they are on the side of the momentum. They're high risk because they can turn in a moment's notice, right? They could turn right around and squeeze you out because we're out of support. But until we have evidence of that, I can't sit there and bet on that, right? So you have to, this is about adjusting expectations. So let's go back to the 4-hour chart. When you're in a conflicting situation like this, it's usually better to work on a smaller time frame because your expectations are smaller. This is where the bot comes in, okay? The trade scanner. By the way, we've made some really great updates thanks to Stian's help over here. And by the way, the link's in the description. If you're interested in another exchange, there's MEXC and there's Bybit. If you sign up for those, it helps Stian out, and he's been doing great work to update the bot that we have that's been calling some excellent trades. Now, the bot, we track all of these trades, and soon we're going to be showing all of that. We're very close, but Stian has been tracking them, and he usually shares pictures in the community of what that tracking looks like. My point is, the bot calls a lot of good trades, and the thing is, it called the short, and that's what I want to talk about here, because this is where expectations and applying some of your own knowledge comes into play. The Bitcoin short from the bot, right? And it goes into how to trade around this, because whether you're using a bot or whether you're using your own decision-making process, it should be the same. The advantage to having the bot is it does all the work for you. It does all the thinking for you. All you have to do is place orders. If you don't know how to place orders, then the bot is not going to be much of a help, okay? Now, the Bitcoin trade was called at 25,980 something, right? Let me put that on here. That was around here somewhere, right? 25. It was up in this area right around there, right? Something like that. It called this thing short. Okay, right around there somewhere. And let me see, is that the right number? Yeah. Right in that area, the short was called. Now, this is not, it called it what, a couple of days ago? What was the date on that short? It wasn't like yesterday. It was like a little earlier. Maybe Raman or Steen, you want to paste that in the chat? By the way, the bot calls the trade. It gives you the stop and it gives you the take profit. Okay. And it's only accessible in the Discord community. Right now, you can't get it anywhere else. We're working on making it so that you can get it by email, but we're not there yet. Okay. But that's how simple. I want it to be as simple as you open up your inbox and there it is. Anyway, so that was the level. Okay. This was the level that it was called. And right now, that short is doing okay. Okay. It's favorable. Now, that thing also called a pretty tight stop and a pretty decent take profit. The ratio is always 1.5 to 1 reward risk. But my point is this. In this situation, right, you have to think with lower expectations. That's really how you trade around this. You don't sit there and buy this thing, right, thinking, okay, this thing's going to 30K or it's going to 50K. That's unreasonable. You have to work with this price action. By the way, this price action is horrendous. When you see something like this, it's usually a good idea not to be involved at all, or just look for very tight day trades, right? So in this situation, you find you have to decide, do you want to align with the momentum or do you want to work with the support? You have to decide which one you want to work with. But the thing is, you have to realize that the momentum is going to rule as long as this structure stays in place, okay? Lower highs, right? We have to assume or anticipate that the momentum is going to stay intact. This is a very important point. And if you're going to take longs, your probability is lower, okay, in the face of this momentum. So you have to account for all of that, right? Using a tighter stop, maybe you're looking for, since we have pretty much a clear level right around here, right? You can go to maybe an hourly time frame if you're more advanced and try to look for day trades long in that area. But if you're looking for a day trade long, you're only looking for a couple of 100 points, okay? The bot is looking for what, like 1,000 points, maybe a little less than 1,000 points. It's like 25.9 something to 25.150. That was the take profit for the bot, okay? So that kind of gives you an idea, but you can be even tighter than that if you want to work on an hourly or if you want to work on a 30-minute chart or something like that, okay? But you have to realize that the long side is losing its value, meaning it's about to get broken, all right? The short side still has all the weight right now until proven otherwise. So this is the next point that I want to make. What does that mean, proven otherwise? You need to take out resistance levels. This right here is a resistance level, okay? That's the resistance level that matters right now. That's what's in play. So as long as you can use that as sort of a gauge, right? You can basically say, okay, look, I mean, look at this. Just going back to here, right? There's something going on here at this level. So you can say, as long as price stays below that level, I should not go long. That's one way to look at this. That's one way to navigate through this. So if you're interested in longs and you want to increase your probability of having a successful trade on the long side, you say, okay, no longs until we break that. Okay, so I'm going to stay out because I don't short Bitcoin. I'm going to stay out until we break that. And then once we do, I'll look for long setups after that. Okay, at that point, momentum is starting to change. Now, on the short side, there's nothing, you don't want to sell right into this, right? You can, if you want to try to short the break, meaning this thing starts to increase, like the momentum starts to increase, and you start to see a large candle, especially taking out here, especially taking out like this area right here, like you see something like this, you want to try that, but that's high risk. You can easily get caught on the wrong side of that, meaning you can get caught in the squeeze if it fakes out. Imagine each one of these candles attempted that break. Okay, see these long tails? Each one of those candles had that break attempt, and a lot of shorts who don't know any better short into that, okay, and they stay in it thinking, oh, I got the breakout, and then they get caught in the squeeze. Okay, this happens over and over and over again. You don't want to be caught. That's a profit opportunity. That's basically what I like to think of as a temporary inefficiency or a behavioral inefficiency, right? Those are great trades if you're advanced enough to capture them, but they're very quick and they're very temporary. My point is, if you're going to go for the short break, you have to be prepared for the squeeze, meaning you get out right away if you get the wrong candle, okay? These pin bars, these bullish pin bars are the wrong candle if you're short. Does that make sense so far? So I'm laying out here like a few scenarios, right? One, you have the breakout, the break of support where you go short to try to capture all the people getting squeezed out of their longs or getting margined out, right? And that move can take this thing to like 22K, 23K, something like that. Sort of like this move here, right? You see this where it just gets hammered like that? That's because everyone is caught and they're all banging it out at the same time. You can say, oh, it's news. Yeah, well, the news is the catalyst behind it, but it's all those traders that were long from here, okay? Everyone that got long, I was long in that as well, right? And I got stopped out at whatever the price was. I can't remember the price right now, but that was a 1,300 point stop. But I was able to avoid a 5,000 point stop. Now, we get this break here, you have that possibility, but that's for more advanced traders. You want to go long and look for the reversal. Again, that's advanced now because probability is working against you. Why? Momentum is bearish, right? If you were thinking on the short side, okay, well, you're at least on the same side as the momentum. And you could try to play that, but you just have to recognize or respect that there's a lot of risk in this area for the shorts as well. And that's what I mean by conflicting. So how do you sort through this? You have to decide what you want to do first. You have to decide what you're trying to exploit. That all has to do with having a trade plan. All right, or having a good grasp of what type of trader you are. If you're brand new to this, you probably shouldn't do anything that I just said. You should probably just wait it out or paper trade, because these are tough situations and it's very easy to lose money. If you're a little more advanced or you're comfortable placing orders, you can get yourself a head start by using something like the bot that we have. Okay, basically the trade scanner. We're working on naming, updating the name. But the point is that the trade scanner is my rules programmed into I automated my rules. Okay. And that thing has been doing very well. So that gives you a huge advantage in a way, because it takes emotion out of the situation. You don't have to sit there and wonder what should I do or where to place the orders, because it tells you where to place the orders. All you have to do is place them and walk away, pretty much. I mean, it helps. It does help if you can judge context. Okay. But if you're brand new, you're not going to be able to judge context. But this thing at least will help you filter out a lot of bad trades that you would normally take. This thing will help you define risk better. There are many benefits to using something like this while you are learning how to judge context. Okay. Through my other resources and training and examples that I regularly share. Okay. So see, like here on TradingView, I think there's a double bottom pattern. Yeah, okay, but a double bottom, sure, there are plenty of double bottom patterns, but it doesn't mean anything in the eyes of the momentum. That's what carries more weight. That's what I mean. You're focused on the double bottom, but you fail to recognize the weight of the momentum. That's called context, okay? And beginners or people with less experience aren't going to be able to weigh context because they don't understand the elements to weigh. They don't understand how to consume the information properly. All right. They basically just grasp at whatever. Oh, double bottom. Oh, this guy said this. Oh, the order flow said that. And it's all this confusing information, right? Again, this is where something like automation solves all that, because it says, here's the trade short, here's the price, here's the take profit, here's the stop. Let's see what happens. All right. So I pretty much gave you the 3 scenarios here on how to manage this or how to trade through this, because chances are this is going to break. And I figure, look, at least I could let you know in the stream before it breaks, because, after it breaks, everyone's going to come out saying, oh, Bitcoin's going to 5,000, right? And all that other nonsense. You can't listen to that stuff. All right. You have to recognize these things for yourself. And again, if there are lower highs, lower low is likely. All I see here are lower highs. So that makes this support suspect for, and vulnerable to breaking. I could be wrong. It may not break, right? The support may hold again, and maybe we'll get a new buy signal. I'm open to that. But the thing is, I'm using technical pieces of information to help me weigh the probabilities. I am not forecasting, right? People always, that's the first mistake a lot of these experts make, is they say, I'm going to give you a forecast. And then they sort of imply that that's what's going to happen. There's no way to know, okay? If you accept the idea that markets are mostly random, you will also understand that no one can forecast markets. They're right randomly. So if you, the sooner you can internalize that, the better off you will be, the more productive you will be in your pursuit of success in the markets, okay? But that's the first thing that I teach people. Markets are random, and they just don't want to get it. They just don't want to understand it. And I understand, but they are. It's like playing a slot machine. So you need to find a way to thrive in a random environment. And rules help you do just that, okay? But the rules, you can't just throw any random rules together. You could put a moving average crossover together, and you can say, oh, okay, I'll just use those. That's a system, right? It's a system, but it has a random outcome because it's not exploiting anything specific. It's just 2 lines crossing each other, right? You need to understand, in order to put a system together that has some chance of working, you have to exploit something specific, what's called an inefficiency, okay? There aren't too many inefficiencies available or that are obvious to exploit, because an inefficiency are basically in this case, large groups of traders making the wrong decision. Now, think about that for a moment. When traders get into a market, or investors, they believe that they're making the right decision. That's why they're putting their money at risk, right? They don't think about what can go wrong. They're confident that this is the right way to go. If everyone knew where the market was going to go, no one would make mistakes, right? But yet we have people making mistakes all the time. Most traders don't make money because they think this way and they bet their money and it's wrong. That money, those mistakes are behavioral inefficiency, right? Because they're seeing something, they're betting their money on it, and it's completely wrong, right? But I'm not going to get into the mechanics of why it's wrong or what causes all of that. But the point is, you need to be able to identify that. What specific mistake, or why should you be able to make money with a system? Okay, that system needs to be aimed at something very particular. And that's what my system is based. I figured out one way using, measuring momentum to identify one of these type of inefficiencies. And that's what I programmed into my bot. Anyway, okay, so ITC, yeah, right, Litecoin. Thanks, Alice. Yeah, Litecoin was a trade that was called by that thing went to its take profit. So that trade is out, right? That was another profitable trade. Bill says, I prefer more investing long-term swing trades. I'm looking to buy the, right, which is that's also a strategy, Bill. That makes sense. It's just that, a lot of traders don't know where to even begin, right? So I'll give you the quick scenario of what happens to a retail trader. They start out, right? They're trying to figure out how to make money in this game. They take some trades, they make a little bit of money, right? Some random trades, random profits. They think they're onto something, then they give it all back and they try to figure out what went wrong. So they continue doing the obvious, right? And they continue on this path of they make a little money and they give it back. And then it gets to the point where they start to get frustrated, and then they start to lose regard for risk, and they stop using stops. And next thing you know, they get caught in a big trade that they lose like half their account, or maybe they wipe out their account, they get margined out. And then at that point, maybe after a year or two of this exercise, they decide that investing is better for them because this trade game is just too hard. Oh, it's not that it's too hard. It's just you don't understand what you're up against. You don't understand that you're in a random environment. Okay. So that's why I developed the bot so that I could make my situation easier, because I have a million things on my plate and it's very hard for me. I can't sit in front of a computer screen for 3 hours waiting for setups. Okay. So I said, man, it'd be nice if I can automate my strategy so that it can tell me and I can do something else while I'm waiting for this thing to tell me. Right. And that's really kind of where the idea came from. Okay. So anyway, yeah. So that's pretty much that. So you guys clear on this Bitcoin scenario? So probability favors the support break. Going long here is generally a bad idea until proven otherwise, right? Like I'm all for buying supports, but this support is not doing, the price action at this support is not doing what it should be doing. There's no strength here, okay? So that implies to me that there's a greater chance that we break this support. And I don't want you guys to get caught in that, okay? So if you want to test out the short side, consider the trade scanner. I even have a light version which produces 1 trade a week, okay? And that's actually functional right now, and soon I'm going to be making it public. We're just watching it, we're testing it. But 1 trade a week, that's in my Discord community, okay? And you get the stop and the take profit and everything, thanks to Steve, he programmed all that. So check that out. And also it'll call a coin, it'll call a stock, or it'll call a Forex pair. 1 each week, only 1. I know some other people, they go 3 free trades a week. Well, in my community, you're getting just 1. And each week it's not going to be the same market, just so you know. That's available for free. All right, anyway. So, okay, I can't read your name here. Okay, cool. On a lazy Sunday afternoon, could you please take a look at, okay, so I'm not answering questions here. In fact, I'm over my time. I just wanted to go over this. I changed my format. I'm only going to be doing like 30 minutes, and I'm not going to be doing Q&A. Only students. Okay, so let me just go back here on my stream. Let me just see what people are saying. I think Mark placed it. No, Steen, yeah, see, no. Okay, let me just go back. What do you think of next week Bitcoin price? Okay, so I pretty much answered that question. That was the subject pretty much. I'm just reading the chat here. Okay. I don't see any other questions from students. All right. If you do not want to short something weaker than Bitcoin, less risky. Right. Well, Cardano, sure. Well, my bot only looks at the top 10 capitalized coins. So something like Rune is not on that list, but Cardano and the other one is. Litecoin went to its take profit. It calls Dogecoin, it calls Binance Coin. So there are 10 coins that it looks at. All right, cool. Hey, Alex. Yeah, I know I surprised everyone today. I see. Right, Bill. Right. I flipped that chart to inverse on the 4-hour and it looks bad. Okay. Right. Have you seen oil prices? Yes, I've been looking at oil. Oil has been unusual. Oil is very tricky because it's geopolitical. There's a lot going on with oil. But I don't cover it as much. I should probably watch it more. Okay. Let's see. It was support before as well. Only reason was pumped. Right. All that nonsense. Right. All this movement here on Bitcoin is just news. Those are news spikes, which means if that news never existed, we'd have basically a lot of nothing, like a lot of altcoins, the way they look. Right. So there's not much going on. Maybe the market's waiting for all that drama coming out, with the SEC stuff coming out this week. If Bitcoin support breaks, that would be a great time for me buying more at lower prices in the next 12 months. Right. Well, if it clears this support, it's going to change the structure, right? And that's why I drew this little square over here on the bottom, because that's like the next area I'm looking for support, somewhere around there if it breaks. So again, I want people to be prepared. Okay. I want people to understand what's going on here so that you don't get caught with there's a lot of misinformation out there. And it's very easy to be misled. Very easy. I just watched a video the other day of these guys talking about how Bitcoin's going to be at 100K in 4 years. So, dollar cost average into this as much as you can because it's going to be there. And Ethereum is going to be at 40K in 4 years. You're buying the bottom of the cycle. Okay, one thing, sure, we're near a bottom, of course, but nothing about risk or that this thing can go to 5K because it can, right? Anything is possible. And they spoke about this Bitcoin being at 100K with like certainty. That's not a good thing, because imagine if you're brand new and you don't know anything about markets, which is mostly the people that they're speaking to. And these guys tell you, they claim that they're experts, and they tell you that Bitcoin will be at 100K in 4 years, dollar cost average into it now. Right. So you're thinking, I'm going to 30X my money. And like you're thinking all this stuff. Meanwhile, it might, but there's no way to know with certainty. That is what they should say. It might, but it's uncertain. There's no way to know. So meanwhile, it can go the other way. It's possible. We don't know what type of surprise news events will be in the future. Markets are random, right? There may be some SEC things we don't know about, like you just don't see it coming. Okay. Also, interest rates play a very important role. What they're talking about is basically an asset bubble. Asset bubbles require low interest rates. I don't see any low interest rates. Do you? So if interest rates are not low, I don't know where the asset bubble is going to come from. Maybe in a few years, we're going to go through another presidential cycle. Maybe some things will change that will instigate a better environment. But right now, I would bet on 15K being tested again before 100K. All right. That's just the way it is right now. Dollar cost averaging in at these levels. Okay. But I would still stay very small. There is no signal by the bond market. There's nothing by the bond market. I want to see the bond market. The bond market usually signals months in advance. I don't even see the signal. So why am I going to start putting money at risk when I don't see the signal? Right. I spotted the top of the stock market in 2021 because the bond markets months earlier gave the signal. So I knew I'm not touching stocks. While everyone else is buying the new highs in the S&P, I wouldn't go near them because I knew with bonds doing this, there's no way the stock market's going to continue. And all the clowns got caught at the top, right? All the sheep get fleeced. That is what happens, and it happens over and over again. Learn economics, learn interest rates, right? That's the key to everything. Interest rates make the world turn, nothing else. Bitcoin does not trade in isolation. It depends on cheap money, just like everything else. It's a speculative asset. It's not a real asset. Okay. It's speculative still. It's not like you're buying IBM or like a conservative stock. Understand that. Okay. Anyway. All right. Enough of these rants. Okay. So let me just read some of these chats here. BTC. Okay. The whole move to 31K. The whole thing, okay? The whole thing was news-driven pump. It looks like similar to now. Right. Well, and it can be, Bill. It very well can be. Thing is, I try not to have any bias, right? Generally, I think Bitcoin is generally an anti-inflationary thing, sort of like gold, right? I do believe those things, but I also understand the role of interest rates and how we need speculative money to drive these type of assets. If there's no cheap money, they can forget about this rally that they keep talking about. Oh, buy the altcoins now. Maybe in a year. Maybe. We have to see what rates do. We have to see what the Federal Reserve does. We need to see how this election thing starts to play out. Those are going to be some important factors. Maybe they play out in the favor, and all these people that are calling these things now just so happen to be right because politics play out in their favor. Maybe. Okay, but there's no way to know this in advance with any certainty. So whatever they say now, they're just making it up and they hope they're right. Or maybe they're that ignorant and they don't even know. They just think they're right, and they just happen to randomly be right. That is how this works, okay? And then everyone thinks they're geniuses if they happen to be right. It's random. All right, anyway. Okay, cool. All right, guys. So I'm not heavily invested. Well, cool, Alex. See, I'm glad I was able to guide you the right way. I'm not heavily invested either because I just don't think now is the time. All right, and trust me, when I believe the time is clear for that, I will let people know. I've been off this stuff for years. I've been saying the same thing, right? Because I just don't see it. And my judgment comes from the bond market. All right. Anyway, and since it steered me right at that stock market top, I mean, I'm convinced. It wasn't like I came across this relationship by mistake. I was taught this as a CMT, but I never really gave it much value until recent years when I started to realize how it worked. Okay. But I was taught about the business cycle and the interest rates a long time ago. But I was not able to put those puzzle pieces together. Like many people today aren't able to put that together. Then once I realized, interest rates are the king. Interest rates drive everything. Then it all made sense. On top of markets being random. Okay. So anyway, all right, you guys, I said a half hour, and look, I'm like 45 minutes into this. See, I talk too much, but I like to talk. All right. So thanks guys for watching. If you have any questions, please check the links in the description. Help Stian out, join one of those exchanges if you're looking for an exchange, because it helps him support the community, and he's been doing great work. So we'd like to keep that. Also, join the community. It's free. I have a lot of free resources in there, and we have Trade of the Week coming. Okay, right now it's the Trade of the Week channel says Trade Scanner Lite, but we're going to change that to Trade of the Week. And each week a new trade will come out with stop loss and take profit. So you can test it out for yourself, paper trade it. That is what I would suggest. Okay. The bot gives you many benefits. Like I said before, if you have any questions about that, you can email me or, come to me. The best way to reach me is in the community. Usually just send me a private message in the community. And if anyone messages you as me, it's a fake. I don't actively message people that way. Okay. So be aware of that. There's been a lot of fake attempts where they ask you for money. I'm not going to message you and ask you for money. Please be aware of that. And don't get fooled. All right, everyone. So enjoy. Thank you for watching. Enjoy the rest of your day, the rest of your evening, wherever you're in the world. And again, thank you for watching.